You have no idea who owns those wallets. So the same people can own multiple wallets. So you don't really know. But my thinking on the whales is I don't think most of the whales got in at the very beginning for pennies of Bitcoin. But I do think they were attracted to it and loaded up on big positions somewhere, between 100 and 1,000. I think a lot of the big money got in. And I think they did coordinate a highly targeted marketing campaign in order to pump up the market price of the Bitcoin that they had acquired. And so I think they have been selling into the hype. And so in my mind, it is a giant pump and dump where the guys that got in relatively early, maybe not on the ground floor, but relatively early, are constantly trying to pump up the market in order to generate a lot of enthusiasm and a momentum and FOMO so that they can sell out, gradually into this market that they are creating. And I think it's part of the whole culture of this hodl, diamond hands trying to convince as many of the little guys to never sell. Because if you're the big guy and you're trying to unload your Bitcoin, you don't want everybody else selling at the same time and screwing it up for you. So you want to convince all the new people who are coming in that they can buy Bitcoin now at 30, 40,000, 50,000 a Bitcoin, and it's going to go to 1 million, it's going to go to 10 million. You got to get those guys on board and make sure they never sell so you can keep getting rid of yours. And that's what I think is going on behind the scenes. So look, I don't think a digital dollar is a threat to Bitcoin or gold. I mean, all a digital dollar is the same fiat currency we have now, tokenized. I mean, most of our transactions in dollars are already digital. I mean, I use my credit card or debit card. I mean, I rarely pay for anything in cash anyway. But the problem with a digital dollar, where the threat lies, is to our freedoms and to our privacy. Because at least if I'm spending paper dollars, I can buy something without the government knowing exactly what I bought and tracking everything I do. But the minute we get rid of the physical paper and everything is forced onto a digital network, the government knows every single thing I buy and when I bought it. And who knows how that information, maybe it seems innocent now, but how it may one day be used against me. And also, I think it will make it even easier for the Federal Reserve to pursue reckless monetary policy, negative interest rates, somehow having an expiration date, or all kinds of crazy things to create even more inflation. So I think a digital dollar would even create more of a need to get rid of the dollar and look for a viable alternative. I just don't think Bitcoin would qualify. I think gold would. People aren't using Bitcoin, they're trading Bitcoin. So if you want to say they're using it for speculation, they're not using it in commerce. It's not really a medium of exchange or a store of value. It is a speculative token that people collect. But you talked about 50 years ago when we went off the gold standard. See what happened, or we closed the gold window. The dollar was backed by gold, and then it was backed by nothing. And the reason it lost so much purchasing power is because a dollar backed by nothing is not as valuable as one backed by gold. The same would apply to cryptocurrency. Let me finish. If I had the choice between a cryptocurrency backed by gold and a cryptocurrency backed by nothing, why would I not choose the cryptocurrency backed by gold? I would. And in fact, a cryptocurrency backed by gold would be easier to use, cheaper to use, more efficient to use than Bitcoin. So I think hands down, you would always prefer a cryptocurrency backed by gold to one backed by nothing. I mean, I don't think Bitcoin is going to solve that problem. I don't think Bitcoin is global money. It is a global bubble. I mean, you have people all around the world involved. But at the end of the day, I think people are going to lose a lot of money who put their trust in Bitcoin and other cryptocurrencies, not just Bitcoin.
What I love about you, Peter, though, is you've been so wrong about this, but you're never in doubt. I mean, this.
Well, no, I haven't been wrong.
45,000.
No. I never said
250,000. What are we going to be doing,
Anthony?
Yeah.
I never said the price couldn't go up. I never said the bubble couldn't get bigger. Now you could say I was wrong to not have profited from it. Obviously, with the benefit of hindsight, sure, I could have bought a bunch of Bitcoin and sold it out to a bunch of greater fools and made a lot of money. But I haven't been wrong in my basic understanding. Now we'll see what happens, because I mean, I think you've come relatively late to the party. I think a lot of the Bitcoin that you and your clients are accumulating, you guys are paying very high prices for it. So we'll see how that looks in a few years. If I actually see Bitcoin used as money, so if I actually see it as a medium of exchange, as a unit of account, if people are being paid in Bitcoin, not having their dollar salaries converted to Bitcoin, but I will work for, a Bitcoin a year. That's my salary, and you pay me in pieces. But when you have landlords, I'm renting this apartment for Bitcoin. I'm going to buy an insurance policy where I pay my premiums in Bitcoin, and my benefit is defined by Bitcoin, not some dollar debt benefit, but some actual out of Bitcoin. So if this can actually work, which I seriously doubt, then I could say I was wrong. But as long as it's just a speculative. Bitcoin has lived its entire life in the everything bubble, right? It started after the financial crisis. Fed was doing all this QE. So it hasn't really lived through economic cycles. It's only lived through a boom. Hasn't lived through a bust. So that's another thing. Let's see how this next bust plays out. Markets crash, lots of inflation, all sorts of problems. Let's see when you have all these speculative assets collapsing, either in nominal terms or in real terms priced in gold. Let's see how Bitcoin holds up in an environment where speculative assets, meme stocks, all that stuff are collapsing. Yeah, well, I would think that the fact that one man's tweets can have such an impact on the daily price valuation is another reason that Bitcoin fails as money. It's just too volatile on a daily basis routinely, and it's too subject to manipulation.
What about Alan Greenspan and Jerome Powell and people like that, Peter? What about those?
Yeah. Well, gold isn't functioning right now as a medium of exchange either, but it has in the past, and it can in the future. Bitcoin never has, so it's a big leap of faith to say that one day it will. But Anthony, just with all due respect, I mean, nobody who's late to the party thinks they're late to the party. Otherwise, you wouldn't come. So you always think that it's going to keep going. But I'm telling you, the police are on the way. They're going to raid this party, and
Peter, when you're buying your Bitcoin at $250,000 a coin, I'm going to assure you that you're not that late.
Don't worry. If Bitcoin goes to 250,000, it's possible. I say it's not very probable. I mean, but nothing's impossible.
Mm-hmm.
But if it happens, I can tell you one thing: I ain't going to buy any. So don't look to me to get out. You got to find another path. Well, a lot of the efficiencies that Anthony was pointing out, they can be solved without the introduction of Bitcoin. I think Bitcoin is very expensive, to create into existence, and it does consume a tremendous amount of energy.
The expensive gold, though. Tell her about.
Let me finish.
Let Peter finish, because we need to move on.
Because when you create Bitcoin, you create nothing of value. The world is no better off today because we have, 18 million Bitcoin than it was before we had any. When you are using energy to create gold, the world now benefits from having gold that's in a usable form as opposed to buried in the earth. And of course, once I have gold, no energy is required for me to have it, but you have to continuously expend energy to keep the Bitcoin network powered. But also what I'm worried about is not just the waste of energy and other resources, but all of the investment money, all of the talent that is being completely squandered in this crypto bubble. All sorts of very smart people are spending a lot of time, wasting a lot of time, coming up with all these crazy industries built around crypto. A lot of people are investing their money. This is a massive bubble. This is what you call a malinvestment in the Austrian school. All of this being fueled by the monetary policies of the Fed. And so at the end of the day, when this bubble pops, not only are we going to be poorer because people would have lost a lot of money, but all of that talent, all of those resources that otherwise could have been put to productive use were wasted on cryptocurrencies.